Alright, so today we're going to talk about an exit strategy. It can be very important in this bull run that you know when to exit. Too many people are just following the trend, but they don't know when to get out, so they just follow the curve down to the bearish trend, and then they are stuck in the coins for several years, usually 2 to 4 years. A bull run lasts about 6 months to 1.5 year. So if you got an exit strategy and you got a plan, then it's very much more easy to actually grab your gains and get the hell out of there. And then you can take your gains in the bear market when you see a new uptrend is coming, and then you get a huge amount, you get a bigger amount of capital to invest in the next bull market, instead of just getting back the gains that you had. So this is what I like to show you. This is TradingView. Currently I got the engine chart here, but we're going to use the Bitcoin chart. And TradingView you can find by googling TradingView, and then this will pop up. So you Google TradingView, you go into the link, and then you come to TradingView's website, and then you go to more, and then you go to download and download desktop app. I don't think mobile app is the best way to go here if you want to see things clearly. I got the essential version of this. There are like 3 or 4 versions. I got the cheapest one. Before that I had the free version. I think you can do with the free version if you just want to keep up with what I'm about to show you. So download TradingView, the free version. You can even start if you want to buy it. It costs around $15 a month, and you get 30 days free trial. But let's say you just download the free version, and I will show you what you do then. So inside of TradingView, usually you click on indicators, and you can find moving averages here. But since my essential version is limited and your free version is absolutely limited, you can click on any of these here, and this will show up. So here you got the essential version, the basic version, premium, and so on, elite. They want you to upgrade because you can't access these. But what you can do there, these functions are already in like a preset. So if you, instead of doing this one, you click on the 4 boxes here, indicator templates, and then you go down to MAX ribbon, and you will see these pop up here, EMA 20 all the way to 55. That's SMA and EMA, but we will just focus on the EMA, exponential moving average. And then you see we got many lines here. That's too much for me, at least, so I will hide everyone except for the last 2. So you just click on the eye there, and those will hide, and now we just see 2 lines, and we're inside the Bitcoin chart, by the way. So here we got the 50-day moving average, and there's a 55-day moving average. We don't want the 55, we want to change that, so we go to settings and then we can go into inputs, and we go into length, and we type in 200, and then we can change the color. So we go into style, and I want to keep that red, I think, because that's the real indicator, if I can explain it in that way. So click OK, and then we go into the settings of the 50-day moving average, and we make that line blue and click OK. So now you can see we got two lines here, and then we want to go into, so if we look at the 5-year chart, we can see two lines, one 50-day moving average in blue and one 200-day moving average in red. And we can see that the last bull run lasted from around here, let's say, or maybe it really started here sometime in September 2020, and then we went all the way to April 2021. So that's almost half a year for the first bull run. But then we entered a bearish trend here. And what my plan is that I want to exit on the first peak, because this, if you're chasing the second peak, yeah, you can do that. It's up to you. But that's just chasing. I don't have the capability to time the market here and then take on the next. Maybe if I look on the weekly chart, I might do that, but the main thing is that I will sell here, because that's an indicator of the bull market is over. So we can expect half a year and a full bull cycle like this, like 1.5 years. But that is only if you want to chase the second peak. Then we enter the bear cycle like we did the last year, and now we're starting to see bullish patterns again. So if we go to the yearly chart, which is the current bull market, so if we zoom out a little, we've been here in the bear market, and now we're in the bull market. So what do I want to show you? I want to show you this crossing. You see here, from the last bull market we went up, and then the blue line crossed downwards, crossing the 200-day moving average, the red line, to the downside, and we had a major bear market. But now the blue line, the 50-day moving average, is crossing again to the upside, above the 200-day moving average. And if we see around 5 candles staying above the line, we can assume that the trend is turning and we go to the upside if we are above the 200-day moving average. So we see here there are at least 5 candles here, and that's making space between the candles and the lines. And then we go down, we test the 200-day moving average again. It acts as a support this time. Here it's resistance, but we broke through, and at least 5 candles, and then we tested it, and now the 200-day moving average acts as support. It was a little bit shaky here, but I don't think we have 5 candles to the downside here. No, not really. So we cannot trust that that's a real bearish sign. So in that case, we stay bullish, and then we see this, and here are like many candles above the 200-day moving average. So we're definitely in a bullish cycle here, but we haven't really decided. The market is careful. And then we go a little bit sideways, but now we see this again. And with the current sentiments you see on Twitter and news and everything with BlackRock and so on, we're definitely on a bullish cycle now. And if we just cross the $39,000 of Bitcoin, I mean, we're on our way to the moon. So my exit strategy is when this 50-day moving average, the blue line, is crossing the 200-day moving average line again to the downside, and if we see more than 5 candles not touching the 200-day moving average below. So the blue line crosses to the downside of the red line, and 5 candles, and I know I'm getting the hell out of my position. I'm exiting everything. But we might not time it as well, so we gotta stay prepared when we see, like in the last bull run, we see a real curve here. So when we see this line really starting to tilt to the downside, we can already then exit our positions, just in case, because it's going down there anyway. So even if you buy in here again, when you see those are crossing, you can take some profits here, but then here it really goes to the downside, and we're definitely in a bear market. So you want to kind of time this top here. It's not easy, but you can see just by looking at this curve. So if you check the yearly chart and you see this curve, yeah, it can go up like this, but there are no such turns here, and there are no such turns here. So when you see a big turn like this, even if it hasn't crossed the 200-day moving average, I would assume that that is the indicator of a start of a new bear market. So bullish trend, blue line crossing the 200-day moving average to the upside, and 5 candles not touching the red line. And maybe we go down here, but it acts as a support. We have to go 5 candles below the 200-day moving average, and those candles cannot touch the 200-day moving average, so we can be certain that is a bearish trend. I will not chase this second. If this happens, that this bull run goes like this up, and then I exit the position, and then it goes down here, and then we can put in our positions again to chase this next bull run. I wouldn't do that because I'm not capable of that, I think, because these peaks are almost equally high, so you made your money here. But you do what you want. If you see this crossing again, yeah, that could be a good idea to enter again. But you can't really be sure what's going to happen here. But you can ride for a while up here, and then you see a curve, and you gotta get out again. But the main thing is chase this first peak, and then when you see a curve like this, you exit some positions, and when you see the blue line cross to the downside and 5 candles below the red line, then you gotta get out, because the red line, if we hide the 50-day moving average, we can see the chart here, and we see the red line. So if we zoom in a little, you can see when we got more than 5 candles to the downside of the red line, then the red line is acting as a support. The 200-day moving, not support, like a resistance. So it tries to break up, but it can't. But here we can see it touches the red line, and we could assume that that would be resistance, but it broke through, and it broke through with more than 5 candles not touching the red line on the upside. So there's space here, and then we can assume that a bull market is starting to trend, and then the red line acts as a support instead. So it touches it goes down here, but that's not 5 candles, is it? No. And it's touching the red line, so we're still in a bull market. And it goes up, and you see more than 5 candles, not touching the red line, goes down on the supports, and so on. And now we're here. We're in for a ride now. So on this side, you see a couple of my coins. I couldn't find all of them on here, but what I got and what I'm currently invested in is Engine. I got 50% of my portfolio in Engine, and I will ride that all the complete bull run. I will have my 50% in Engine. The other 50% that I actually sold from Engine, because I was all in, I was 100% in Engine, but then I had no capital really to invest in other things, and there was a Engine and the other token, Affinity, is going to merge into something called Matrix, and Affinity token hasn't diluted everything yet. Maybe it has now, because there has come some new news and so on, but that made me a little bit skeptical. I thought maybe a pullback would come from that new dilution. More supply would be added to Engine that is already fully diluted. So that made me pull out 50%. I will keep the other 50% on the complete bull run, and the other 50% I had invested in S-Fund, in Joe XYZ. You can find it on Twitter. Trader Joe is the profile. And I have Shrapnel, and I had AVAX, but I sold it off to buy the dip now on Shrapnel when the news came out from the lawsuits. And what more? I got Shrapnel, I got Joe, I got S-Fund, I got Engine. I actually think that's it. Those are the 4 coins I have. Those are the 4 coins I have. But I'm looking at this blockchain bets. It's just because Alex Becker, the guiding guru of crypto, has made partnership with these as an advisor, and that's very bullish for the coin. It has been very hyped up in the last week, so when it comes down a little, I will put some of the percents from the other 3 coins I'm invested in and put it into blockchain bets. A small percentage. I will not touch these 50% I got in Engine. Engine is solid. They are deep in the NFT and gaming space. They are like established already. They have been here since 2009, and they are like they're one of the top coins in gaming. You cannot go wrong with Engine, in my opinion. It's not financial advice, but I will keep 50% of my portfolio in Engine throughout the bull run, and I will also keep the full amount in these other coins throughout the bull run, but I might touch them, take some amounts out of them to put in coins like this, blockchain bets, just to add to my portfolio, and speculate with a low percentage. So if I'm going to sell off a little, I'm going to sell off of these 3 coins here, but I won't sell them completely because I believe in them. I'm in for the long run. I'm going to be here throughout the bull run. So Engine throughout the bull run completely, these 3 also throughout the bull run, but I will take some small percentage from these 3 and maybe put in some other coins, like this one. So this is the main one. These are the rest 70. Like if this is 50%, these are 50% as well, and I would like to take 10% of these into another coin like blockchain bets. Uh, it was a little bit messy described. I'm stumbling a little bit with the English here. I think I'm getting a little bit faster in explaining, but I still got a barrier. I think I'm not used to talking on the go like this. I have to be prepared, or I have to read something to make it more fluent, so it can be a bit a little bit stumbling. I can't find the words really I'm looking for. So that's it for exit strategy. You got the 50-day moving average and you got the 200-day moving average. The 200-day moving average acts as a support or resistance depending on which side, if you're above it or below it. And then you will see 5 candles to the upside, then the 200-day moving average will act as a support. If you got 5 candles not touching the line on the downside, then the 200-day moving average will act as a resistance. And then you got the 50-day moving average as a indicator when it crosses the 200-day moving average line. To the downside it's bearish, to the upside it's bullish. And as we see here, we are now in a very bullish trend, and the 50-day moving average has crossed the 200-day moving average, and the more they separate, the more bullish it is. And when you see curves like these, then you gotta think of when you want to exit. If you want to exit when you see the curve, or you want to exit when you definitely see the crossing to the downside and 5 candles to the downside not touching the 200-day moving average. So that's it. Good luck, and hopefully we will be millionaires before 2025. But this is the main thing if you want to keep your profits and invest after the next bear market and into the new bull market with new capital. This was a long ramble. I'm sorry for that. Maybe I edit it a little bit shorter, or you can speed up. It doesn't matter now really because the video is over. So have a good one. I'll see you in the next video.